Yes, you might have thought, wow, you're exaggerating about the ticking time bomb. So what do you do in this situation? I don't know. uh, Prepare for it. How do you prepare? Well, make sure you have extra food, water, and whatever, extra fuel in the tank of your car, because come June, we could see everything come to a halt, not just in the United States. We could see the whole world stop. Tuesday, April 25th, 2023, Monaco 64, home of alternative economics and contrarian views. We're going to look at the debt ceiling today, the impasse in the US. We're going to look at why the American debt situation is a debt time bomb. And I didn't say that. You will see who said that. It wasn't me. The exact quote was, without exaggeration, American debt is a ticking time bomb. And this is going to impact not just America, it's going to impact the whole world. We saw news yesterday out of South Africa. South Africa is part of the BRICS: Brazil, Russia, India, China, South Africa, hence the acronym BRICS. They're hosting the summit for the BRICS nations on June 2nd and June 3rd in Cape Town, South Africa. And a South African minister, he said that 19 countries have expressed an interest in joining the BRICS. So that's very interesting. We've known already, of course, in the last 6 months that other countries are looking to join. It says here that Iran and Saudi Arabia both are looking to join BRICS. Speculation about Mexico, even South Korea. And I think the more you look at the situation in the US, the debt situation, the debt ceiling, the possibility of a temporary shutdown, temporary default by the US is very serious. Yes, things might get reset, so to speak, and they might solve the problem after a few weeks or a month, but it will damage the credibility and reputation of the US Treasury and the United States system forever, I would say, with other countries. And is it any wonder they're trying to find some kind of alternative? I'm not even saying that they're going to give up on the dollar eventually, because they will go back to trading with the United States, I would say, even if there is a default. And I think it's getting more and more likely that there will be a temporary default. I know in the past it's always been solved at the last minute. 2011, there's a lot of brinksmanship, and eventually they got things settled. But this time it could be different. That's one of these times. Rafi Faber noticed that the difference between the 2-month and the 1-month Treasury bill rates spiked massively, over 1%. Which is basically saying that there could be some kind of a breach, a temporary breach of the debt ceiling. Yes, the short-term consequences would be massive. What could happen? I don't know. I was chatting with a friend yesterday about this, and they could shut everything down. I'll give you an example. And this is something I experienced actually in the United States. Back in 1989, I was just about to start working in Geneva. I had a few weeks off, and I went to visit a friend of mine, a friend that I made at university in Geneva. She had moved back to the US, and she had gotten a job in San Francisco. So I went there to visit her from Switzerland, and it was in October, and she was working at the time, so she was going to get some time off to do with business. She was going to go visit some clients, in Monterey Peninsula, south of San Francisco. And as you know, I'm into golf. So I went ahead, I rented a car and drove and went to play some really nice golf courses down there, Pebble Beach, Poppy Hills, and so on. And then she came for her business meeting, and we stayed there for a couple of days. But the last day that I was there playing golf, the big earthquake happened. And yes, we were back at the hotel. Everything was shut down. We were going to go back to San Francisco the next day. We had to wait a day. There was, so this is what could happen, but on a national and international basis, I would say, if the US were to default, why would it affect the UK and other countries? Maybe this is why they had this alert situation on Sunday. They want to test this alert here in the UK. Well, most people don't realize most countries' currencies are backed by the dollar. So if the US defaults for a week or two or even a month, the whole world's financial system, the whole world's banking system shuts down. It's going to be a mess. I actually don't know exactly what would happen because this is unprecedented. Am I trying to scare you? No. Up until yesterday, I was of the thought that they would get this done, that the White House and Congress would sit down and listen to each other. But yesterday, I changed my mind a little bit. And am I saying this is going to happen? No, but it's definitely something you should be concerned about. It's probably not something that the mainstream media is focusing on. They're focusing on more on what's happened to Tucker Carlson, which in of itself is something serious. So here's what I'm talking about. Yesterday, I listened to an address by Kevin McCarthy, the Speaker of the House of Representatives in the U.S., to the New York Stock Exchange. And he spoke to them on the 17th of April, so just over a week ago, Monday last week. And he said some things that were quite amazing that I couldn't believe. One of them was this. He said, and after I tell you what he said, I'll let you listen to it to prove to you that I'm not making this up. He said, I met with President Biden on February 1st, 2023, 75 days ago at the White House. He met to talk about the debt ceiling, try to negotiate. And this is what he said. I have not heard from Joe Biden since. He said, Joe Biden has gone missing in action.
I just wish the current extreme Joe Biden would listen to the former Joe Biden too. I met with President Biden at the White House on February 1st, 75 days ago. During our meeting, I told the president clearly, let's find a way to come to an agreement, like we have before. Had the president agreed to negotiate in good faith, we'd already be done. Unfortunately, I have not heard from the White House since our very first meeting. President Biden has been missing in action and misleading the public.
What are the other things he said in this address that I thought were really important? Well, he's the one who quoted, and I'll let you listen to it as well after I quote it myself. Without exaggeration, American debt is a ticking time bomb.
Without exaggeration, American debt is a ticking time bomb that will detonate unless we take serious, responsible action.
So here we have the man in charge of the purse, really indirectly, Kevin McCarthy, because he's the Speaker of the House. The House has the power of the purse, and the man who's got executive power. They haven't met in 75 days to talk about something really serious that could happen. A default could happen as as soon as in about 5 to 6 weeks. Now you can see why the BRICS countries and other countries are concerned about having an alternative to the dollar, because everything could come to a halt. It's really irresponsible, I would say. But the other points Kevin McCarthy made, he said, from 1940 to 2023, the U.S. paid $9 trillion in interest on its total debt. Yes, over those 83 years, $9 trillion. This is going to blow your mind. He said in the next 10 years, the U.S. will pay $10.5 trillion in interest. So the U.S. is going to pay $1.5 trillion more in 10 years than what it paid in 83 years.
Over the next 10 years, the United States will pay $10.5 trillion just in interest on our debt. Put that in perspective. Since 1940 until today, we have paid $9 trillion of interest in our total debt. Over 83 years, $9 trillion. And now we're going to pay 10.5 and 10.
The debt is going to consume the interest on the debt. It's going to consume the private economy. And here we have the President of the United States not wanting to talk about anything, leaving it to the last minute. So I wanted to see what had happened after Kevin McCarthy's address to the New York Stock Exchange. And I'm going to put a link to it above in the card so you can listen to the whole thing if you want. Yes, I have put the clips on, so you know I'm not making this up. But I saw another article here, more recent, and this is from The Guardian, and this is from Sunday, April 23rd. So just about a week after his address. And it says, Congress squabble over debt ceiling as risk of default inches closer. So they talk about actually his address to the New York Stock Exchange. But this is how Biden responded. It says, Biden responded to McCarthy's proposal with a scoff, dismissing Republicans' debt limit bill as a set of wacko notions that would harm working Americans. So I'll give you the summary of what McCarthy wants to do, his proposal. And his proposal might not even go through Congress because the Republican majority is very slim. I think what Biden's trying to do is to say, no, you have to increase that debt limit. It's not related to anything else. You just have to do it. We're not gonna compromise. We're not gonna try to stop this debt tsunami that Kevin McCarthy talked about. And his hope is that the Republicans get scared and agree to just lift the debt limit without really trying to fix the debt problem, which, as you've seen, is humongous. 10 trillion, 10.5 trillion in interest by total paid by 2033 in 10 years, which is 1.5 trillion more than in the last 83 years. And Kevin McCarthy actually said this is going to destroy Social Security and Medicare and all the entitlement programs in the U.S. if they don't do something about it. And his idea is to just go back to 2022 spending and then cut discretionary spending by 1% every year, which seems reasonable to me. Or not cut, but just increase by 1%, I'm sorry. So he's not even wanting to cut it. And the other thing he said, there's a lot of money that was allocated for COVID, but recently Congress passed a bill saying that COVID is finished, and even Biden signed on to it. And all he wants is to pay that money back to the taxpayer because we don't need it anymore, he said. So I think this is serious. And yes, you might have thought, wow, you're exaggerating about the ticking time bomb. So what do you do in this situation? I don't know. Prepare for it. How do you prepare? Well, make sure you have extra food, water, and whatever, extra fuel in the tank of your car, because come June, we could see everything come to a halt, not just in the United States. We could see the whole world stop. Yes, it's not going to be permanent. It will. These people will sort something out. But the damage to the credibility of the United States in terms of the U.S. dollar is going to be damaged. It's going to be huge, and it's going to accelerate the number of countries that will want to have some kind of alternative to dealing in the dollar system. And I think that's what this BRICS expansion is all about. It is partly as well because the U.S. has been punishing and sanctioning countries. They've been using the dollar as a weapon, but this is totally different as well. And what about gold and silver? Well, it's always good to have physical gold and silver, especially constitutional silver pre-1965. If everything comes to a halt, if banks shut down, the government is so big, not just in the U.S., but in the U.K. Prior to World War I in the 19th century, government spending was less than 10% of GDP. Now we're at more than 30, even sometimes 50%. So you can see if government stops, the federal government stops, the whole economy stops, unfortunately. I think, the dollar will be damaged. And what currency is going to take over? I don't know. I think people are just going to use their own currencies, but there's going to have to be something, an asset that will back those currencies, because it's very difficult to trust other countries, other people with just paper, right? So it's going to have to be gold. Maybe silver will be there too. So there you go. Interesting times. And with that, let's quickly look at where the markets are this morning. And talking about that, we had the UK budget deficit for the fiscal year. It was 139.2 billion pounds. They're saying that it's a little less than expected, but UK GDP is about 2.2 trillion pounds a year. So that works out to a deficit, budget deficit to GDP of 6.3%, which is the kind of deficit you run in an emergency, in a recession. And if the government had balanced its budget, the economy would be in a recession. And that, why is that? Because the equation for GDP counts government spending. So there you go. Government spent 6.3% of GDP. I don't think the economy budged. Maybe it was up 0.1 year on year. So if you take out that 6%, our economy, the real private economy, is in a deep recession, I would say. Anyway, it's 8:20 a.m. London time. Let's check the markets. We got spot gold at $19.97. It's up about $8. High's been 2001, and the low has been 1987. Silver is up. Silver is unchanged, 25.15. High's been 38, and the low has been 05. The Dow futures is down 115. S&P is down 50. S&P is down 16. The NASDAQ 100 futures down 50. So what would happen if there was a debt U.S. default, temporary, like a week or two, maybe even a month? I think all the stock markets would shut down. And that's happened before, I think, at the outbreak of World War I. So you wouldn't be able to get your money out of the market. Am I saying you should rush now and sell? No, this is just speculation on my part. Anyway, to the currencies, sterling is down 0.2 at 124.59. The euro is down 0.2 as well at 110.28. The dollar is unchanged versus the yen, 134.15. And the dollar is up 1/3% versus the yuan at 6.92. Let's check out dollar versus the ruble. Well, dollar is down slightly at 81.34. To the other currencies here, Aussie dollar is down 1/3%, 66.75. Dollar is up 0.2 versus the Canadian dollar, 135.63. And the Kiwi dollar is unchanged, 61.63. Let's look at the commodities, general commodities. WTI crude is unchanged, 78.70. Brent crude is unchanged as well as at 82.50. Platinum is down $1 at 1,090. And high-grade copper is down 0.2% at 394. And let's check the U.S. Bond market. The 10-year yield right now is at 3.45. It's down 6 basis points. The 2-year is down 9 basis points at 4.05. And the 1-month T-bill yield is at 3.59, and the 2-month is almost at 5%. So it's about 1.3% difference. So with that, I'm going to wish you all a very good day. Take care. Bye.